Hello, RiverRock High School, Block 3 and Block 4, Finance and Economics. A few announcements. I hope everyone is safe, all your families are doing well, and as a reminder, please continue to monitor your email, monitor your Google Classroom, in particular for our class. There are keywords for this next assignment at your Google Classroom, and there are some other guidance for your post assignment activities, and as well as classroom announcements. So again, all that in your Google Classroom. Please take time every day to take a look at your Google Classroom, and thank you for watching this video. Finance and Economics, Blocks 3 and 4. So the big question, how will the federal government's decision to lower interest rates affect your family's economics? So in recent news, there's discussions about the federal government lowering the Fed rate to ensure our economy maintains a healthy pace as we confront the coronavirus, the COVID-19 environment that we are living in at this moment. So this may have an impact upon your family, a potential positive impact. Some impacts that your family may see would be lower interest rates on mortgages. So if mom and dad are looking to buy a house, borrowing that money would become cheaper. So therefore, they could potentially borrow more money or borrow the same amount and pay a lower monthly mortgage payment. Maybe your mom and dad already own a house, or they're buying a house, so it could be an opportunity to refinance, and we'll talk about that in a moment. So lowering interest rates makes borrowing money for a vehicle less expensive. So some positive things here. Credit card interest rates. So if your mom and dad, or even you, if you have a credit card, you use your credit card and you make a purchase, that's borrowing money on a card and paying that money back. If you don't pay back within a month, you'll be paying interest, and that interest rate should go down as a result of recent federal government plans to lower the Fed borrowing rate. So there are some positive impacts on businesses as well. We're focused more on the household, the day-to-day individuals. We'll get in another session. We'll get into the impacts on businesses, but not today. So there is an example. I'm gonna go over and talk to you about. So I mentioned mortgage rates should go down, and by the mortgage rates going down, it makes it easier for those looking to buy. And that's whether someone is looking to sell their home and buy a home, or someone maybe a first-time buyer. So positive impacts of the Fed lowering the rate. If your mom and dad were to purchase their home back in say 2010 for $395,000, and they took out a 30-year mortgage for 4.95%. And now we're in today's environment. The rates have gone down. 30-year rate, 3.5%. A 15-year rate, 2.95%. Your mom and dad purchased this home for $395,000 10 years ago. The value is probably much greater. Let's say the value is now $450,000. So see some of the things I've written here. Today's value, $450,000. So this scenario could be a positive opportunity for your mom and dad to refinance. If they refinance, they would most likely lower the monthly mortgage payment. They could also potentially take 5 years off their mortgage. And how do I get 5 years? So in 2010, there was a 30-year mortgage taken out. Move forward 10 years, they refinance for 15 years. So that's 5 years less at a lower payment, lower interest, and your mom and dad could have the house paid off instead of 25 period from the beginning in 2010 down to a 25-year period. These are all just scenarios, options, and positive things as a result of the federal government lowering interest rates. Now, what is the effect on savers? So I'm borrowing money, I can borrow at a lower cost, but I'm saving money. Normally what happens, savings interest rates also go down. So if you're on a fixed income and you're relying upon interest from savings, it can have a negative effect. So again, as a reminder, I want you to go back into your Google Classroom, review all your keywords. Remember also, in the description of this video, you're going to find a video assessment link. Please go to that link, complete your assessment, and that's going to be for all videos that I put up. There will be an assessment, and there will be points in which you'll be assigned. All this, again, in your Google Classroom. Please keep an eye on your Google Classroom. Keep watching these videos. The nice thing, you can go back to the video and watch it again if you feel like you've missed something. Some assignments, so activities for you guys. There's 3 scenarios I'm going to put out, and you don't have to complete all 3, but at least one of these. Specific and detailed guidance is in your Google Classroom. One of the assignments is to speak with your family and how the rate decrease will affect your household. Report back to me on a video, upload the video, or you can write a paper, whatever you prefer, whatever you're comfortable with. But the idea is to have a discussion with your family and how the federal government lowering interest rates will affect your household. I want you to do some this is another option. So the next one is research and advise on negative impacts when their rates go down. So not everyone's going to be affected positively. What are some what are those scenarios? So do some research, and you can report back with a short video clip, or you can write a paper. Whatever you're comfortable with. Details, points value for each will be different, and all that will be located in your Google Classroom. The due dates. The due dates are also in your Google Classroom. Here's a third assignment, and these are, you're not required to do all 3, just one of the 3, whatever one you're comfortable with. So you have some time to think about it. The due dates are again located in your Google Classroom. And the third option is, I want you to track, and you may have to call some banks. You may have to call lenders, mortgage companies. So find at least 4 mortgage companies, and I want you to track rates. What were the rates like a year ago? What were the rates like 6 months ago? And what are the rates like now? And what rates am I talking about? I'm talking about mortgage rates. The 15-year mortgage rate, the 15-year mortgage rate, and the 30-year mortgage rate. And then the other side of this assignment, I want you to look at savings rates. So for the same period, looking at 3 periods. 1 year ago, 6 months ago, and current. What do those rates look like? If you're a saver, and if you're borrowing for a 15 or 30-year mortgage. I have set up a template in your Google Classroom, and I wish you guys well. Thank you for watching this video, and stay tuned. There will be more assignments to come, and thank you.